Hi, this is Randy Finney with the Right Side of the Chart, and today is Monday, September 19th, 2016. I wanted to do an update on the trade ideas. I just did a couple last week in video format, and I had some feedback. One of the members on the site sent me a private message stating how useful he found the update on the trade ideas. He was able to then see, even on the short trade idea videos, everything at once, all the active trade ideas on the site, and that way it was a lot easier for him to quickly identify which ones stood out to him, which patterns he liked, which ones he didn't, and versus having to comb through, click on and read all the posts associated, because some trade ideas have multiple posts, 2, 3, or more as a trade goes on and I update it. So he had asked if this could be a regular thing, and absolutely. And I encourage anyone and everyone to send feedback. You can post it publicly in the trading room. You can send a private message, use a contact form, send me an email. But I will make a point to do these on a more regular basis where we just quickly run through and update the trade ideas. Now, I'm going to start out here. This is one I posted in the trading room. If you're a silver member watching this video, you don't have access to the trading room, but I do post a lot of trade ideas, either unofficial, sometimes in the case of Kara, I had some things going on today, including my own trading and other things, so I put it out there before the breakout when it was just right struggling with this area here, this 670-ish area. I mentioned the level is 670, which is roughly where that level is. And it's broken out, and everything that I was looking for, I wanted to see volume, pulse of price action. That's all playing out so far. So let's just review this chart. It has room to run, and I'll talk a little bit about the company. You can see this level, that 670-ish level, was really defined by these two reaction lows and mainly that gap. That was the last reaction low before a big gap down. Then you had Kara came back to test that level here, failed, pulled back. Broke through there, found its support, chopped through it a few times. It looks like it closed every day above there, so that's further validating that trend line. You can see two reactions there where it stopped cold on there. You had this intraday break, which I mentioned in the trading room. That's why I was a little leery at first to add that, because it had a history recently of two false intraday breakouts above the that 670-ish level. But today's breakout looks like the real deal. You can see this impulsive candlestick, big green candlestick. It's confirmed on volume so far. These are the targets that I listed were 774. The actual resistance level is 780. I adjusted that. You see a target level, if you see a chart and I have just a level up there like this and matching without listing that as a target, that's the actual resistance level. Let's see, I can show it on the line. But when I make an adjustment, if I list a target, those are already adjusted for an optimal fill. In other words, this resistance level defined by this reaction as well as this reaction back here, that's the $9 level. So I set my price target and I adjust it. There's a lot that goes into this. That a more volatile stock, I might, especially something approaches a target that's pretty far up there, I'll set it a comfortable margin. So in this case, that's set 12 cents below that level. But that's where I'd expect the reaction at $9, but I don't want to miss a fill, so I set my price targets, sometimes only a penny or two below the level, sometimes right on the level. Again, it all depends. That's just my read on the chart. So so far so good. We can see the PPO moving into bullish territory here. Don't worry about overbought on a biotech. Cara is a small biotech company. They're in the business of pain management. They have a few drugs in pipeline. Some are, opiate-based drugs that bind to opiate receptors, and they have one in early-stage clinical trials. It's actually a cannabis or marijuana-based drug that binds to the cannabinoid receptors. So some promising stuff. And the whole point is with this company is they're working on drugs, as most of you know, that the most the pain management drugs with the most efficacy are typically the ones that are most addictive. So there's the rub. And this company's working on some drugs that lower addiction potential, and that's a huge market. So again, it's a speculative small biotech company, but chart looks good, and that's first and foremost all that matters. Also worth mentioning here, I know at least one person in the trading room said they took care of, is a potential inverse head and shoulders bottoming pattern with the left shoulder head, right shoulder, and the same level there being the neckline. So that's something else to watch for. And if that were to play out, then let's clear this out. Just an idea, if you take to get a projection on a inverse head and shoulders pattern, you take the distance from the head to the neckline and then add that to where it breaks out. So a lot of promise there. Now, when I trade a chart, I look at if I see horizontal resistance, a key resistance level just below, that's usually where I'll set my target, and hence the reason for that final target right now there. But again, if this one, if the charts firm up, maybe I book partial profits and tuck some away longer term. And if this one comes back in and offers an objective long entry, maybe on a back test, I might add that as an official trade idea. Here's another downtrend line to watch. It's going to come in right around that target area you can see there. So those are some levels to watch on Cara. And here's the intraday chart. This is a 2-minute period. And it shows so far, it's pulling back a little bit right here. There's some profit, intraday profit taken. We'll keep an eye on it. But you can see the volume on the breakouts. See, there's that 680 level, 670, 680. So it's broken out. It's now taken out that level. And after the breakout, this whole period here, you can see has been marked with an increase in volume. I didn't exactly draw that perfectly. It's more like this area here. Above the high volume. So what would be healthy? You can see some horizontal support here if you're in this one. By the time the video comes out, it's a fast moving stock. You might have already missed that, but I should have drawn that line right there. Yeah, capture that low. This is a support. So let's see how the stock acts if it pulls. Well, it's almost there now. If it pulls back to that level, finds support, moves on up. The next bullish event would be a breakout of these intraday highs of 730 so far. So let's watch and see what happens there. But as of now, looks good. And again, maybe it comes back into back test. That 680 level you can see right there would be an objective long entry with a stop not too far below. Okay, let's roll into the trade ideas. I'm guilty of not having updated some of these. Recently, we had quite several that have been stopped out. Some that hit profit targets. I need to post some updates on the front page, but I'll go through. These were the either current or some of these might have been stopped out, but a lot look good, and I wanted to make mention that too, not to digress too much. I made mention in the trading room of this. Just a couple days leading up to a big FOMC meeting. In other words, not all of them are big. There's some FOMC meetings that for the most part are non-events. We know exactly what the Fed's going to do. They broadcast it clearly. There's no speculation of a hike or any surprise verbiage coming out of them. This one's a little different. The odds still favor they're going to stand tight on rates, but it's really what they say going forward. We still have another 2 meetings, one coming up in November, one in December, and there's a potential for fireworks from this meeting. But with that being said, there's also, from my experience, the days just in front of leading up to a FOMC announcement, which will be this Wednesday afternoon, the announcement, you tend to see a lot of false breakouts. You see volatility. Nobody wants to really position in front of the Fed, so it's just a day trader's playground. The big funds, volume drops off in the markets, and that allows the big boys. The lower the volume is, it's easier for them to run stops, to gun the market up, gun it down, to clear out stops. So personally, I suspend my stops on anything that still looks good, as long as the position looks good. There's a couple things I've closed out in the last week here, but for the most part, I try to avoid new long side breakouts. I'm being very cautious with Cara, also because it's a small biotech. I mean, you got to beta adjust down. You can't take a big position. I only have a small one there. And the other trades, which I'll go over today, some have been stopped out and some today, but I'm giving those a little more room because the pattern looks good, and I'll cover those. So let's just cover these longs. CBFF. This one is still a long-term trade, and a long-term trade is something really intended as an investment or a trend trade. Want to see this get above $1 and hold above $1. So far, so good. Most trades on the right side of the chart are swing trades. They're all either swing trades or longer-term trades. A swing trade is typically a trade with a holding period measured in just a few weeks or a couple months, maybe 3-4 week average. Sometimes those trades will hit their target price target in even same day or just a few days. In the case of the first ACBFF, long trade, we hit the first target and just broke out here. 1, 2, 3. In 3 days, it hit the target. Then we recycled back in here, cut on the lows, and it took just a couple weeks to hit that swing target of 94 cents. And more importantly, to update this, excuse me, we on the first trade, one of the main reasons for going long was this bearish pennant or bullish pennant pattern here. We had the flagpole right there. There's the clone of the flagpole, and that was a projected target. So we hit that target, and then since then the stock pulled back. It came back to this resistance or former resistance, now support level. Let's move this out of the way. You can see that reaction. So that was a basis for my entry on the long there back, the re-entry I should say, or new long entry at just under 61 cents. But since then, this has been the price action. We've had this move up from there. The stock found support where it should have. This is a flagpole, a strong impulsive move leading up to a consolidation period. There's a bull flag and now a breakout. If this bull flag plays out the way to its expected move, you just simply take the distance of the flagpole here and you add that to the bottom of the flag. So that would take us above the $1 level. So far the price action has been nice coming out of there. You saw volume taper off within the flag here, and then some expansion of volume on the breakout, and that's what you want to see. So far so good for longer term trade. Let's move on to a couple others. Mosaic, this one's still within this trading range, and there's not much to report on it. Dividend stocks have been coming under pressure lately overall. In fears that of an imminent rate hike, whether it happens this meeting, November, December. Sooner or later, there's at least fears that we'll see some rate hikes, and still well above the stop. That's a long-term trade, growth and income trade, so you can give that one room, or you can use a tighter stop. I had mentioned before too, this would have been one potential stop level under this uptrend line. So and that certainly would have been the case. You can see a breakdown. It was a very valid trend line. Once prices broke, there was an impulsive move down. Caught support at this midpoint. There's some support there, and it's since broken down. So the bottom of the range here will be the next support level, and you can use certainly a tighter stop than that. That's again based on a long-term trade with longer-term price targets way up here. IPI, I believe that one already stopped out. I mentioned I did an update here. This was an uptrend line that it should have held and it didn't hold. And if you're giving it more room, then this support level here at 118 is your key support. You don't want to see it go below there. Again, that one was updated in detail last week. Now let's look at the short trade ideas. A lot of the active shorts are mining stocks, and again, these were all updated, so I'll just breeze on them. Nothing's changed. This chart still looks bearish. It looks to me that HL still has a good shot at hitting that final target at 487. It's moving down. I don't see anything on the daily chart on the MACD or PPO. I'm using a PPO right now, but I've talked about this before. If you look at the MACD and PPO on most stocks, it's nearly identical. So they're cousins of each other, and sometimes I'll have the MACD up, usually on daily charts, but sometimes I'll use a PPO depending on the stocks I'm looking at. PPO might work a little bit better, so let's just put this one back. And GDX, like I said, you can see the recent failed bullish crossover indicators. PPO still heading lower, the RSI heading lower, failure to get above the 50 level, which often acts, as you can see here. If we move to the left, the RSI, the 50 level, the midpoint range, often acts as support when tested from above, or resistance when tested from below. And so something to note, the failure there of both the PPO trying to make a bullish cross and the RSI trying to get above the 50 level. So I still think this one has a little more downside to go. And of course, the ultimate fate of all the metal and mining trades will depend largely on how GDX does. But GDX, via Nugget, my preferred trading proxy, is still an official trade idea with this as the final target, 228. And we just need to take out this support level here at the that's at the first support level, and you have this Fibonacci there as well. So really a move under to be safe. 24, 38, 35 we need to take out. UEIC, Universal Electronics, looks good. Recent bearish cross on the PPO. Wedge breakdown. I have two alternative uptrend lines here. First target is just below, and I don't see anything in the charts, at least in the daily charts, to confirm me, to worry me, I should say, that concern me is what I meant to say. Remember, a lot of noise. That's just an old trend line there. With a breakout and back test. But we probably won't see these trades do much of anything. Maybe that volatility will bring a few down to hit our targets. As I mentioned, a couple have been stopped out. We're still fine on this one as far as stops go. Next one up is Pandora. Pandora still looks fine. We added that inside the wedge. It has since broken down and appears to be bear flagging. If you look right here underneath the wedge, I didn't draw that perfectly. Can't move those lines once I draw them, but that area right there, it appears to be bear flagging. And if so, this would be, you have this move down that led to the breakout. I keep grabbing the wrong drawing tool here, but you have this move down, that would be your flagpole. And if it breaks down, that breakdown should take us, if that is a bear flag, it'll take us below this support level here, this line, and open the door for a move down to that first target level in time. And again, don't expect a lot of fireworks until after the FOMC meeting. MO, Altria Group, not much to say. It looks fine. Look at indicators. PPO is still pointed clearly lower. The stock is moving clearly lower, trading above that 200-day moving average where it found a little support. And we're already more than halfway down to the first target, so I don't see anything, might not go straight there, but I think it'll continue to work its way down. AVGO, Broadcom Limited. Broadcom looks fine. Stop well below the stop. So this one's not really at a risk of being stopped out. I think the stop is up at 186, way up here. Looks like just the first counter trend bounce after it bounced off this S2 level. So still looks like a possible failure here. You can see it looks like the lines are poised to cross, but turning back down. And just, again, nice looking chart. You just have to give these guys some room, be patient with these. The market is kind of grinding around here, especially in front of the Fed. But this one, I don't see anything in the charts, at least not in the daily chart here, that concerns me on that trade. CDNS, Cadence Design, we shorted that one before the neckline in anticipation of a break. We found support, as I updated recently. We had a bounce off the initial tag. When I say initial tag, the first tag of that level in a while, that uptrend line, the neckline on the pattern, and came down, and now we're flirting with it. So we're dancing around with that neckline. So we need to see all the indicators are pointed down. We had negative divergence on here up to this point. If you look at that line, that's really where that should be drawn. That right shoulder seems a bit high, but it's also an upsloping neckline. So I was okay with that. Whether it's a head and shoulders or not, that is support. The indicators are pointing down. Looks like a bearish cross is pending on the PPO here, and I think that one looks good. Just needs to really get down below there. Maybe take out Friday's lows would really open the door on that one to the downside. Nano, I'm not so thrilled with this one anymore. Let's see where stop on Nano is. Nanometrics is at 2191. So we're, if they take it, let it go. Breakdown, back test, but I don't like the fact it's trading sideways. And this is a lot. All these trades, the reason these short trades are frustrating right now, it has to do with this, the broad market. This, the breakdowns and the SPY and the Qs, and then the snapback rally, especially in the Qs. The Qs are, as you all know, very tech heavy, and we have a lot of tech stocks. We have a lot of semis right now as shorts, so that's led to frustration with these trades. But we'll just leave these stops. If you have a trading plan, leave it in place, and you're either going to get stopped out or you'll hit the targets. I still favor this one working out. I just wouldn't add. It wouldn't be my favorite to add to right now. Nor would I really do much before in front of the Fed. AMAT clipped the stop today. AMAT was 30.56. Just barely clipped the stock, as you can see. Let me fix those numbers. But still looks good. I mean, it's back testing here. Let's draw this a little, zoom in. I can modify that trend line really zeroed in. All it's done is break down and back test, and strong divergent high. This is just an extension. This is another divergent high right here at this point. MACD is now lower. The PPO and MACD and the RSI are lower as it ekes out to this marginal new high on a back test. So I still very much like this one. Still short, giving myself, allowing my positions a little room in front of the Fed. SMH just fell shy of that first target there, 62.64. Coming in within, well under a percentage point of there, and had initial reaction, put in another marginal new high. I still think the semis are going lower. Where was the stop on that one? 67.30 versus a high of 67.68. So I'll take it off. These will move off as official trade ideas. But as I mentioned, the trading room, I'm very likely to add these back on, giving my positions a little more room for now till after the Fed, see what the market does after the FOMC meeting, and really on Thursday I'll firm up my own stops. But yeah, as far as an active trade, this one's off, and we can always add it back on. Let's see, QQQ, that one already updated. That one already ran the stop on last week. CDE, just flirting with this support level. Had one intraday break. Look at the PPO still pointed lower. That failed bullish crossover that I circled there, and it was rejected, and it's in bearish territory. This is the first cross. See the white line, the 9 EMA, below the 0 line. And again, going back, this is a great trend indicator. It defined, it was under this whole period, and it helped define this downtrend over that period of time. It was above over here when the stock was in an uptrend, crossed below when the stock was in a downtrend. Went back above, stayed above. It was just above. You can see that whole way there. And again, I like to use this when there's separation. When you're flirting around, dancing around the 0 level like this sideways, the trend indicators don't work so well. It's when you get the separation. And then this would have been your, confirmation here. Your buy signal, so to speak, back then would have been this breakout above the downtrend line, and then further confirmation comes with the cross above the 0 line, and this is now bearish confirmation, and we didn't just limp below, we're solidly now well below the 0 line, and so I still favor the at least these first two official targets, and then we may get to this potential third target down there around the 730 level. But work to be done on the miners right now. DLB, Dolby Labs. Let's see. This one, 50.83 was our stop, and the high so far, 51.36. So that one is taken out. Another one, and just back testing the wedge, and I wouldn't be surprised. See how we're just inside the wedge. I wouldn't be surprised to see us close back below the wedge or right on the trend line with a daily close down below there. That's a pretty well-defined trend line. This just looks like a stop clearing run to me. And but again, we're going to stick with these stops, and I'll remove these trade ideas from the official trade category soon. NVIDIA, another one. Again, this is just as I said earlier, these tech companies tend to move in synchronicity or in close, close correlation to each other and the or the Qs, I should say. So NVIDIA was, I'm looking for my notes here, 63.90 was our stop. So we just took that out, and you can see the failure so far, an attempt to make a new high, and we've fallen back down today. We're a little bit above that previous high of 63.50. We're at 64.25, but watch for a failure there. Potential bullish crossover. It hasn't occurred yet. Let's see what happens. But remember, we're following this period of a pretty clear negative divergence here at the highs. This new high is still a divergent high. What makes it a divergent high is the fact that the PPO, as well as the MACD, if I put the MACD up here, and the RSI are still making lower highs while prices make a new higher high. And so again, it's just a matter of time, and we need the broad market to roll over for these short trades to work out. So price line, that one, God, that was based off the weekly chart, and I went over this before. I don't think anyone's in this. If it closes above 1452, it's gone, and I haven't updated that. I haven't heard from anybody in that one. So that's the active trade ideas, guys. And again, the market has been choppy, so that has caused a lot of failure on these trades, and I've kept the official or suggested stops tight, and I don't regret that. If you're risk adverse, let them go. As I said, you can always get back into these, and who knows, maybe the market explodes to the upside following the FOMC meeting. The one thing I can guarantee is we're probably going to see some volatility this week. So I'll do a market update under a separate post, and I'll wrap this one up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.